All right, let's jump right in. Today we're diving into a really fascinating idea from Jerry Bourne's The Millionaire Educator blog. Seriously, this could totally change the way you think about your federal income taxes. We're going to pull back the curtain on the U.S. tax code to uncover what he calls free money.
I know. It sounds a little wild, right? Free money from the tax code? Is that even a thing? Well, the idea that you can earn a certain amount of income and have your federal tax bill be literally zero, that is exactly the question we're digging into today.
Okay, so who's our guide on this journey? His name is Jerry Bourne. He's the mind behind the Millionaire Educator blog, and he's been exploring this whole concept for years as part of his own financial plan.
And here's what makes his perspective so great. Jerry is super clear that he's not a CPA, he's not some tax professional in an ivory tower. He's coming at this just like the rest of us, a regular person trying to figure out this ridiculously complicated system. And that makes what he's figured out feel so much more possible.
So let's get down to brass tacks. What on earth is this free money that he's talking about? Let's get the official definition straight.
Yep, it's really that straightforward. Free money is simply the amount of income you can bring in before you owe a single dollar in federal income tax. It's basically your personal 0% tax bracket. And it's not some sneaky loophole, it's just how the system is literally designed to work.
So how do we figure out this magic number? Well, for most people, it really boils down to two big things. First, you've got the standard deduction. Everybody gets this, and the amount just depends on your filing status. And second, you have the super powerful child tax credit. And listen, a credit isn't like a deduction. A deduction just lowers your taxable income. A credit crushes your actual tax bill dollar for dollar. It is a huge deal, and it applies for every kid you have under 17.
Okay, theory is one thing, but to really get this, we've got to see it in action. We need to look at some actual numbers. So let's walk through a case study using the projected numbers for the 2025 tax year.
Let's start with a couple. They're married, filing jointly, but they don't have any kids. For 2025, their standard deduction is a whopping $30,000. That means they can earn up to 30 grand in income and pay absolutely zero in federal income tax. That's their baseline free money, right there.
But hang on, this is where it gets really cool. What if $30,000 just isn't enough for you to live on? Well, this is Jerry Bourne's central idea. You don't have to just sit back and take a massive tax hit. You can actually choose, strategically, to pay a tiny amount of tax to unlock a whole lot more income at a crazy low rate.
Now just look at this table. This is where the magic happens. Let's say that same couple decides, you know what, we're willing to pay just $1,000 in taxes. Boom, they can now earn $39,000. Willing to pay $2,000? Now you're up at $49,000. And just look at those effective tax rates. We're talking 2.5% to just over 5%. That is an unbelievably low tax rate for a pretty solid income.
Now, if your head is spinning a little bit looking at that sexy tax math, as the blog calls it, don't worry, you are not alone. But the logic is actually pretty simple. For a couple filing jointly, that first chunk of taxable income, we're talking almost $24,000, is only taxed at 10%. So paying $1,000 in tax just means you earned an extra $10,000 inside that super low bracket.
But what really matters is what's left in your pocket, right? This chart shows you what you actually take home after that tiny tax bill is paid. You could be bringing home $38,000, $47,000, or almost $56,000 a year. For a lot of people, that's a really comfortable life with a teeny tiny tax hit.
Okay, that case study makes it all crystal clear. Now let's look at the numbers for all the other filing statuses so you can find yourself on these charts.
First things first, let's cover the scenarios for all the taxpayers out there who are not claiming the child tax credit. This is going to be your baseline free money amount.
So for everyone without kids, it's pretty simple. Your free money is just your standard deduction. That means you get $15,000 if you're single or married filing separately, and that $30,000 number we already looked at for couples married filing jointly.
All right, now for the real game changer. Let's see what happens when we throw that $2,000 per child tax credit into the mix. You're going to want to see this.
Whoa, just look at this. For a couple filing jointly, one child bumps their 0% tax income level all the way up to $50,000. Two kids, it's over $67,000. And get this, with three kids, they can earn over $100,000 before paying a single penny in federal income tax. $100 grand. That's incredible.
And the effect is just as amazing for those filing as head of household. You start with a standard deduction of over 22 grand. But add one child and your free money jumps to $42,500. With three kids, you can earn all the way up to $93,000 completely tax-free.
And finally, for those who are married filing separately, the base amount is $15,000. But that shoots up to $35,000 with one child and climbs all the way to over $85,000 with 3 children.
Okay, so let's bring it all home. What's the big takeaway here? What's the single most important message from this whole strategy?
This quote from Jerry Bourne just nails it. The whole point of this isn't just to find your 0% income level. It's about realizing you're in control. You have the power to decide how much income you actually need. And because of that, you get to choose the tax bill you're willing to pay.
So if you remember just one thing from all of this, let it be this. You have way more control over your tax planning than you probably ever thought possible. You are no longer just a passive person waiting for a tax bill. You can be an active planner making choices that are right for your financial life.
And that really brings us to the final question, doesn't it? We've talked about the concept, we've walked through all the tables, the information is right here in front of you, so the only question left is how are you going to use it to plan out your 2025?